going to start with trading stocks. What I think is better to trade stock indices. Stock indices move faster, whereas the actual stocks of the companies move slightly a bit slower and are affected with fundamentals just a little bit more. Stock indices are now just indices which track an average number of companies on their performance. So you can just research on the definitions of the stock indices, like the S&P 500, that not sorry, that step index for synthetic indices. The US 500 or S&P 500 is just an index, okay? It's just an instrument tracking the average movement of the best 500 stock companies in USA, or it's US 500. The other stock indices are this one, German 40, top 40 stock companies in German. This one for JP225, it's in Japan, maybe top 225 companies. This one, France 40, I think maybe top 40 in France. You can just check the actual definitions on the internet. It's public knowledge. Then for US tech, I think it's best 100 companies in the technology sector. Euro 50, top 50 in Europe, top 200 in Australia, maybe top 50 in Hong Kong, top 20 in must be Switzerland, this one. So even if you go to, for those who are new, if you go to the video on asset classes, you will see I did explain the differences in asset classes, those which are safer. And the advantage with stock indices is that they are affected less with black swan events. So black swan events, for those new to trading, these are events in trading where price can just jump from one price point to a different price point without any actual trading, to the point that your stop loss won't be respected, and either you can make a sudden profit or sudden loss depending on which trade direction your trade will be predicted. So sometimes they happen due to manipulation from the market makers, but sometimes it will actually be because of an event which might happen in the world, which maybe even the market makers would not have caused. So because the stock indices like this one, US 500 or S&P 500, because it's an index tracking the top 500 stocks in USA. If one stock in USA is to be affected with a black swan event, it's not going to affect the S&P 500. Okay, you would need a very drastic event where many stocks would be affected. Okay, maybe if a nuclear bomb maybe is dropped in USA for you to have the indices being affected that much, or any other big event which will very rarely occur. But for stocks, the actual stocks of the companies like Facebook or Apple or whatever, they are just representing a single company. So even if the company itself, if the performance of the company on the profit of the business drops abruptly, maybe because of policy decisions made in the company or whatever, they could be a change in price, like what happened to ANC stock. You can research on it, which did have more of like a black swan event where the price crashed down to zero almost in an instant. So for those newer to trading, okay, like even if I go to the shapes there, I'm just putting these lines to, okay, maybe I can actually use the actual. So if I act as if I'm going to open a trade on this demo practice account, okay, if I use this option for where you can put pending orders, okay, which are just orders where your trade can open once price reaches a certain level when you are not there, okay, I can then, like if I put there for that sell limit or buy limit, whatever, if I select stop loss, okay, for those new to trading, and then if I select TP, I'll then drag it to bring it above. This now means that if price, okay, which is currently here, if it lowers down to this blue level, my trade will be opened even when I'm not on my device. And then from that blue level of the entry price of my trade, if price increases to this take profit level, okay, return TP there, my trade will close in a profit automatically even if I'm not on my device. But if price goes down instead first and hits my stop loss, the trade will automatically close in a loss. Okay, so what I was talking of, the dangers now of some of the black swan events, not all of them will fail to respect a stop loss if your trade goes in a loss, because some of them will have candles moving gradually but in a very fast manner. But there are some which are just instant gaps, which are more rare, where price can just jump from one point to another. So if it would jump to a point below that stop loss just in a second, whatever loss occurs to that next price will be your actual loss, and the loss of your trade will no longer be limited. But if you were lucky to be on the correct side and the black swan event happened in your favor, of course you would also then have a profit. So this is the advantage now maybe of trading stock indices and also foreign currencies. For the other asset class of currencies, okay, like Great British Pound versus US dollar, they have an increased risk of black swan events, in the sense that if the country, okay, makes a policy decision which can change the rate of a currency, you may have an abrupt change which may come without notice, although sometimes they may come with a notice. So if, like for example, if you research on the depegging of the Swiss franc from the US dollar, which happened some years ago, it wasn't announced in advance, and their central bank, okay, in, I think it's Switzerland, they just made a decision of removing their currency from being denominated to the US dollar. And then the price just changed in an instant, and some traders in that instant made a lot of money, some lost money more than what their stop loss was, and some brokers even went bankrupt because of that. So what I'm going to do on this video is I'm just going to do a back test on a few instruments maybe, and then on different versions of strategies. And obviously I cannot finish the back test because remember, like I told you, some of these back tests can last even up to hours, a few hours, some of them a few days, some of them even a week or a few weeks, depending on how fast you are recording the trades, and also depending on how many strategies you are recording at the same time. Now also there on backtesting, I did also mention in my video of backtesting on my YouTube channel that try to avoid using softwares when backtesting. There are certain softwares which backtest, but that comes with the disadvantages, because not a lot of people are able to program softwares which can backtest discretional strategies, and those which can be easily backtested are strategies which are more mechanical, but then usually those strategies are not um, really profitable. They don't have good performance a lot of the times. And some of the people do lie who make softwares to backtest the strategies, saying that they can efficiently backtest, but they can give you some problems. So maybe if you are to use a software to backtest for discretionary strategies, you could just use it maybe for you to see which instruments you should backtest first yourselves, maybe so you don't waste time backtesting instruments which have poor performance, but you will have to confirm yourself doing your backtest manually. And then remember, after backtesting, you also will have to do a forward test where you use the results from your backtest to now try and predict a future period in time, even though it will be in the past, using the results from your backtests. Because remember, price in the past will have a certain difference from that in the future, although you can compensate for that difference. So now I'm just going to start, maybe instead of this UK 100, I'll start with the daily range strategy on financial instruments. Okay, not synthetic indices. I'll just start with the S&P 500. So for higher time frame trend, I use exponential moving averages. So on the daily time frame, those I use, you just adjust the settings to period, method, exponential. Okay, then color, you can put whatever color you want. Then the other one I use is period 18, also exponential. When I'm doing intraday trading, these are trading only being opened within the same day. So these two lines for those new to trading. They just show an average movement of past price, but in a way which tries to show momentum of price and tries to follow institutional order flow of where the uh, price algorithm is trying to have its momentum going, although there will be a slight lag, but there are things which you can try to compensate in trying to reduce that lag, which I can show you later on. So for those new to trading, after seeing your trend on a higher time frame, like the daily time frame, now for intraday trading, of course, we will now be trading inside these candles now on lower time frames. So to select the time frames, you can select them. If you want to put other time frames here, okay, which are not there, so they can quickly appear on this wheel here. When you select, just press on the screen, okay, to change those which appear there on that easy access. You can just come to that setting, and then if you like what's mentioned there at the bottom, if you can only have a number of about 9 time frames. So if you want the ones which are on easy access are these ones with the blue icons. If you want to change one, you can remove one by long pressing it, and then long pressing the other one which you want to appear. And then if you even just press it once, it can go down straight to the 15-minute, the 15-minute time frame, where now each candle is formed within 15 minutes with price, okay, being the one on the right axis there, representing where price will be for those new to trading. So for the bias methods I gave you, okay, one of the bias methods I use actually one of the best for trading. S&P 500 is the first protraction of day. So remember, protraction is just a movement which occurs against daily bias. So remember, bias is trying to predict more of color of a candle. So if it's daily time frame and we are trying to predict the color of a candle, that's what we mean when we are saying bias. And in that color of a candle, that indicates the momentum inside of the candle on lower time frames. So now if you now go on a smaller time frame, like 15-minute time frame for bias, the first bias method I gave you, the first protraction, if I come to this other day, okay, because today is a Monday, so that's why you see that these small period in these smaller demarcations, that's Sunday, okay, 17 May, though today it's now Monday 18. So if I come to a day which is fully formed, the last previous day which was fully formed, this will be Friday, as you can see there. So you see that this day, okay, price would have opened somewhere around there and was more of a bearish day by it having downward momentum, with price closing the day at a lower region than where it started. So remember, on MetaTrader, you won't use those demarcations for financial instruments because GMT time of MetaTrader here, when we are in March to November months, is 4 hours ahead of EST time. So your beginning of day for financial instruments will be at 4 a.m. So let me zoom in closer so you can see more clearly. So that will be your 4 a.m. candle. So I'm going to put a, if I just press the screen, select that wheel on the object, can then select even a vertical line. So I place one there. Okay, where the 4 a.m. candle is. Then it did be November to March months, you would place it on the 5 a.m. GMT candle, because remember, in November to March months, they will increase 1 hour difference from GMT time or our time CAT in South Africa or Zimbabwe to be compared to New York EST time. So here the bias reading of the first protraction of day gave a wrong bias method, because within the first 2 hours and 45 minutes of day, which will be now to be the open price of the 6:45 a.m. candle or the close price of the 6:30 candle, which in just short means to just consider up to the 6:30 a.m. candle. Just place another line for you to see there. You see now that this region gave a movement which was downward. So actually, according to that bias reading, this day was supposed to be a bullish day, okay, where there would have been a general upward momentum predicting a green candle on the daily time frame, that higher time frame now, okay, here on the daily time frame, where each candle is formed within a period of 1 day. That's why you see now that the candle where I placed those red vertical lines, for sure it's a candle which is red there. But if I go down back now, and if I select, okay, that's one other also thing for those new to trading. If I go down on a lower time frame, okay, If you quickly select this blue icon, it will jump to the position in which this extreme left will be on that day. Now down on your lower time frame, so that when you are backtesting, let's say you are here on 10 April, you won't have to go on a lower time frame, down on 50-minute time frame, and have to scroll back to 10 April every time, because that will make your backtesting process even longer. But if you're on your higher time frame, just go down to the 50-minute time frame. If you quickly select that, it then jumped me to 3 April. So sometimes it might be slightly inaccurate if you wouldn't have really looked at the time. But if I just go on the daily time frame down to the 15-minute time frame and then just move to the previous day I was showing here, that's there. So this was the protraction I was saying, the movement which should occur against a bias. So let me look for a day where the protraction actually gave a good reading, just so you can see an example. But I did explain this in my video of bias methods. Okay, so with this day, even though there was a lot of general downward movement, it was a day predicted to be a bullish bias, in the sense that from this open price of day, okay, somewhere around there, actually let me put maybe the specific price. This video is going to be longer than I thought, so I'm going to place a red horizontal line. That black, it's actually a black horizontal line, okay, on open of the candle. Even though there was a general downward movement, the day I consider this, even in my test, to be a bullish reading and day, in the sense that the end of the day, which will now be the candle before the 4 a.m. GMT of the next day, which will be the close or complete form of the 345 candle, since it's a 15-minute time frame candle. The price now then ended up closing higher than the open price of the previous day, because you now see, if I now then come here, okay, close or full formation of the 345 candle, the one before the next day of the 4 a.m. now on the next day, the 345, okay, that little red candle there, okay, you will see that the day closed higher. So this, on the daily time frame, would now be a green candle this day, this 12th May. If I go up now to the daily time frame, you actually see that okay, here on MetaTrader it appears as a red candle, remember, because MetaTrader uses GMT time. Remember that it's 4 hours ahead of New York time, so that may cause uh, difference in colors on a few of the candles. But if you were using TradingView application when backtesting, you wouldn't have this problem, because you can adjust time zone to whatever time zone you want on TradingView application. But I don't even bother myself doing that. I like the speed with which you can backtest using MetaTrader. Okay, I know if this is confusing for you, you can just go to TradingView and use it, but you see that with time as you get more experience, you might actually end up preferring MetaTrader because of the speed with which you can scroll charts when doing your back test. So you can have sometimes some days like this where, even though, okay, let me place vertical lines to demarcate the open price of New York day for you to clearly see the beginning and end of a financial instrument day. Okay. That red line is beginning of the day, that other red line is close of the day. Even though MetaTrader shows beginning of day and close of day to be those black dashed lines because it's using GMT time. But you use those red lines. Okay, unless if you were using TradingView application, you wouldn't have this complication. So because price opened here on this black line but ended up closing there, it's a bullish day in the sense that the candle closed higher. It ended up being a green day, although the candle did have a strong downward movement on the day, then an upward movement on the day. So you can have days like this where the momentum readings sometimes can even be downward in terms of momentum, but the day will close being higher, being a green candle. So those are just some inaccuracies, of course, which will happen, but you will see that still your trading can be profitable despite that. So on this day, okay, there was a, let me remove the moving averages so you can see a bit more clear. If you press on these, for those new to trading, if you press, they can disappear or appear. So now I pressed on them, they are now no longer appearing. So because the initial protraction of the day had a more downward movement, on this day you had a more accurate bias reading, because for sure the day ended up closing being a higher price. So remember, for the first protraction, it's from midnight EST for financial instruments to beginning of 6:45. It's a 2 and 3/4 hour period. But you can, instead of using the open price of this 6:45 GMT, you can now just instead use the close or full formation of the previous candle, which is 6:30. So I'm now just going to place a vertical line there so you can clearly see the period. Okay, so on this region you can see price moved further lower, okay, including the 6:30 candle itself there. If I move it on the side a bit, you would then see it more clearly. Then I'm returning it there. You see price moved further lower more than it moved higher. So remember, I see that as a downward movement to predict bullish day, a daily time frame candle which will end up being green, because remember, protraction is movement against buyers. Market makers do that at beginning of day to try and mislead traders into selling, even though they will eventually increase price later on. So it's more of a manipulation. And this will be the first, usually it will be the region with the first week of the daily time frame candle. Remember, weeks are these like needles on candles, and then bodies are the thicker regions for those new to trading. So usually the first week forms Okay, and then you have the body, and then maybe a region with um, the last and second week. So I'm actually have spent a lot of time explaining these basics. I'm actually going to be able to record less trades than I wanted to record. Now, when trading financial instruments, what you should also do when trading asset classes of stock indices or foreign currencies traded against the US dollar or stocks, okay, actual stock equities like Facebook, you trade them when the US dollar has a higher time frame trend which opposes your instrument that you are trading. If you are to trade stock indices, okay, remember indices tracking stocks or their actual stocks or foreign currencies traded against the US dollar, like that GBP US dollar, even Bitcoin versus US dollar. But if you are so those asset classes move on higher time frames, okay, like the daily time frame or whatever, they usually move in with an opposing momentum than of the US dollar. If you are doing intraday trading, you will be checking your trend on the daily time frame. Okay, and then if you were to do short-term trading, you will check your trend on the weekly time frame. But remember, like I said in the other video of backtest, instead of using the 9 EMA, you will use combinations of the 18 and the 40 exponential moving averages. So for me, these will now be blue and black. They track trend better on higher time frames. Here on the weekly time frame, where now each candle is fully formed within a period of 1 week with different prices on the axis on the right side there. Then even also when trading on swing trades. So remember, first of all, before I go to the swing trades, your trades you are checking trend on weekly time frame will be short-term trades which last more than a day up to a week. And then now going to the higher time frame, those where you primarily checked the trend on the monthly time frame, where each candle forms in a month, will be your swing trades. Swing trades are now trades forming more than 2 weeks up to a few months. So now I'm going to remove that 40 EMA. I switched it off and switched on the 9 exponential moving averages. So now when for checking higher time frame trend of the US dollar, I use XNES. Deriv doesn't have the US dollar. I use XNES when on MetaTrader. But if you are on TradingView, you can still just check the US dollar there. So XNES is another broker, less reputable than Deriv though. A few more complain about it, but it has DXY as its symbol, as the US dollar. Okay, US dollar index, it will be an index, not just the actual currency. So here, if you okay, this is just a position I was opening so they don't close the demo accounts. XNES closes your demo account after about a week or two if you don't open anything. So I just opened that trade to leave it there. It's just a demo practice account, it's not real money. So here also the US dollar, you can see on the daily time frame the trends are also there with the EMAs. And then if you don't want to use MetaTrader, you can just check your US dollar here. And remember on TradingView, if I come back here from your main page to add a new instrument, just in case you want to have your US dollar there at the beginning, You go to that plus sign at the top right corner, and then you can search for whatever type of instrument you want. So for some, the advantage with trading views, it can show you price sources coming from different brokers, and even sometimes even crypto exchanges. Okay, like you see there, the Kraken, Binance, whatever. And even scrolling down, you can see even other sources. It's USDT, these are now against a token, not just the US dollar index. But if you type US dollar, it will be easier for you to see even other brokers. These are now CFD brokers. These are the ones you can use, or those for futures. Don't use crypto exchanges. Okay, CFDs, the type of one of the type of derivatives which trade, or if it's futures, it's okay. So if you select the plus sign, you'll be able to view it on your watch list on those which were on my main menu. But just to open the chart, you can even just long press it and then select chart. You can then do that also later on. So XNES also uses GMT time zone. It supplies price with GMT time to MetaTrader application. So maybe let me close this trade for now so that it won't be confusing to those new to trading. So on the trades, on the trends, higher time frame trends being opposing, like when the EMAs were in a downtrend there, meaning the dollar was in a downward momentum, that is when you would be looking for uptrends and buy trades in asset classes like stock indices, stocks, and foreign currencies traded against the US dollar, where another currency is in front of the US dollar on the currency pair. So on the using the moving averages for those new to trading, remember when they cross, okay, and they start to open away from each other, okay, significantly, okay, on these days when I would start to consider the US dollar in a downtrend. They on Thursday 9 April, okay, going there up until they would have crossed again. Doesn't matter if the candles will now start to go up, you just stop when they now cross again. So on this, when backtesting now, depending on whether you start looking at the other asset classes or here from the US dollar, okay, it will be from this period where the dollar is in a downtrend there, where you would then look now for those other asset classes to now be in an uptrend, and then you will be recording your buy trade setups. So the only asset classes that you don't wait for higher time frames to oppose the US dollar, meaning that those which have a positive correlation with the US dollar and not a negative one, those will be asset classes like bonds. For those new to trading, that's an asset class which its higher time frames moves almost in the same direction as the US dollar. Okay, so bonds you can find them in trade broker if you're in Zimbabwe, but for others obviously you can check with other brokers. So as an example, if I'm just now going to record a few trades on the daily range strategy, it's already on my YouTube channel. It's just trying to predict these candle colors of the days, okay, the momentum inside now the candle. So you can trade the strategy as CFD version or binary option derivatives, and that videos of the strategies explain that. So if I place, okay, red vertical line there, where I would start to record trades for, where I would start to see the US dollar coming in a downward momentum, okay, I would then look to see from 9 April up to 14 May to look for when the S&P 500, now those stock indices, to be having excuse me, to be having buy trades. Okay, from 14 May back now to 9 April. So now I'm going back to derivative. So Exness broker does have price feeds which are almost the same with derivative broker. It's just slightly different. So since derivative stock indices, they brought new versions from a new different exchange center. You see that the weekly time frame, if you go on a higher time frame, um, you easily and fast, in a fast way, see that price feed starts from around 2 June to 2024. So when checking for higher time frame trends of very high time frames like weekly time frame and monthly time frame, if you are someone using MetaTrader application, you can check those trends on Exness, or even to backtest your short-term strategies or swing strategies on trades which will now be before 2 June 2024. Because Exness, its price feed is just nearly the same as of derivative, but obviously within the period where you do have price feed on derivative, you just do the backtest on derivative if you are going to use derivative. But for other brokers, you won't have these problems. They did not change the exchange center where they were taking price from. So if I go back down to the daily time frame, okay, first of all, when you start to backtest for those new, first of all, scroll in, okay, to the largest view, scroll back as much as maybe just for about like 2 of these pages on your phone, so the moving averages can calculate more accurate readings because they are calculated based on price trend. So if I now come there, remember I said from 9 April to 14 May, that is when the US dollar was going in a downward momentum. So from the 9 April, okay, there, coming to here to 14 May, I will now be recording buy trades for the US 500 index. Okay, so if you want, even you could even then place red vertical line so that when you reach to 14 May, you would know that it's your last day for looking for trades, so you wouldn't go past beyond it. Okay, but at least here I already know this one will be for 9 April. So I'm going to jump down to the 1 hour time frame, then down to the 15-minute. It's more accurate that if you just jump straight down to the 15-minute with a big difference, it may make a more bigger error. But here it did not give me the chance of that little bloating because there wasn't because if I zoom out, okay, for those new to trading, you will see that the 9 April there was too close to the edge. It was too close to the edge there. That's why when I went down to the lower time frame, it couldn't give me that blow thing for me to jump to date of where the extreme left edge was on a higher time frame. So on those cases, you will just have to scroll. But as you move further back on the daily time frame, it will now become easier to use that feature to save time. Okay, so now this is 1 hour time frame. Then I'll go now down again to the 15-minute time frame. Protraction bias method. We use 15-minute time frame so we can accurately see when the protraction ends at the end of 2:45 a.m. New York EST time. So I'm temporarily switching off the EMAs, moving averages, so those new to trading will have a bit less of confusion. Okay, so here from this day, from 4 a.m., okay, on this candle there, okay, that one, price obviously here had more of an upward momentum than downward, I think, up until to close of 6:30 candle. It's full formation. Okay, you won't now include 6:45 unless if you want to include the it's open, but it's just easier to just consider the full formation of 6:30, because if you include this candle, it's now going now beyond 6:45. We don't want to include the time after 6:45 a.m. because it's 2 hours 45 minutes. So because from this open price, because remember, for those new to trading, if a candle, okay, is green, is bullish, let me use maybe instead the candle with wicks. If you look at this other green candle, how candles form is that price starts to form the lower neck of the candle for green candles, then it goes lower to the lowest low of that candle, okay, that lower wick, then it gradually price goes higher, okay, to its highest high, and then after that gradually drops lower to the lower neck of the green candle to form its close. That's why I was telling you even also today in the group that on a formation of a green candle, generally from its open, okay, price will gradually go down, then gradually go up to its highest high, then after that gradually come back down to form its close, then after that the next candle forms. So you can always, if you want to see that, for those new to trading, you can just go to the 1 minute time frame and you can see candles forming, because 1 minute time frame will have candles forming fast. Okay, so you would, if you were to go down on lower time frames than 15 minutes, like even those less than 1 minute time frame, on those seconds time frames on trading view application, you could actually see how the candle would form inside the 15-minute time frame, now on lower time frames. But here we are on the 15-minute time frame inside the day of 9 April, okay, to see what price was doing inside the daily time frame candle of 9 April. So though we are in an uptrend on the S&P, okay, the candle would form here. This one is a black one, meaning that price closed exactly where it formed. You will see that from its open, price moved higher more than it moved lower within the period. So being an upward movement, that would give a bearish signal for the day. So we wouldn't record the trade this day on 9 April. And then one thing also I forgot to tell you, for financial instruments, it's best you trade financial instruments when intraday trading, only trading Tuesdays to Thursdays. That's when the markets move better. Although markets for financial instruments move are open Mondays to Fridays, except for maybe just cryptocurrencies, which are open 7 days a week. So you also do have to check this on your calendar. Just trade Tuesdays to Thursdays. Yes, Mondays and Fridays for intraday trading will have more poor performance. Although some people do trade them, but it's not necessary for you to do so. But if you are trading short-term trading, where you're trades, remember, last more than a day up to a week. You could even have even opened your trade on Monday and closed the trade maybe even on Friday. It doesn't matter because you won't be affected much with the intraday volatility within the trade, as your trade is now of a longer time frame. So 9 April was actually a Thursday, checking on my calendar. So in backtesting, you will have to have a calendar beside you. You can even download one on your device, or you have an actual separate one, a printed one, which will be even be faster if you can do that. So I'm now going on the next day, but the next day now is Friday. Oh, actually, I forgot. MetaTrader added a new feature. You can now see the days at the bottom of the chart. So you no longer need to use the calendars. They usually didn't have that. So for these small period, okay, where there's two close demarcations, these will be Sunday. Remember, markets, they don't open exactly Monday morning, but it's Sunday evening in USA. So that will be just that small Sunday. That's why you have to ignore the Sunday candles when trading. So after Sunday, this will be Monday. Okay, as you can see at the bottom of the screen, this will now be Tuesday. So I'm now going again to 4 a.m. Okay, so price would have opened there up until close of 6:30. That includes this candle, and I'm now moving this aside to the 6:45 candle, so you can clearly see the 6:30 candle. Okay, so from the open price, which is slightly there, you can see price, it moved lower further than it moved higher. So I'm now just going to confirm that reading. Okay, so with the upgrade they did on MetaTrader, for those new to trading, if you place the crosshair on the was for red candles, okay, when I explained how candles paint for green candles that time, but didn't explain how they paint for red candles. So for red candles, it will be the opposite. If we are looking at that red candle, how it would form, price would start at the upper neck, then gradually go higher to its high, then after that gradually come down to its low, then after that gradually increase. You can see that in the photo I posted in the in the group, and also even the video I gave you for the candle range strategy. I explained this. Even if you just research this on the internet, you can see this. It's basic knowledge in trading. And even if you want, you can just go down to the 1 minute time frame. Like I told you, the candles, they paint fast, so you'll be able to see candles forming. So anyway, price would start there. If you want, if the candlesticks really confuse you, okay, you can use a line chart. So if you press on the screen and that view comes up, and you go to the settings, on line type instead of candlestick, you could use a line chart. Okay, it will now be just where price is just a line. So it actually could even enable you, maybe for those who are confused with candlesticks, but it is an advantage if you use a candlestick charts, because you will see more information like the candle colors and other things. So from there, okay, if you have dragged it to where you want it to measure from, you just press the screen again at any random place, and then it then brings this box. Then you use two fingers on your screen, where you now press with one and continue pressing with that same finger. Then with the second finger, you now drag it. Okay, so now dragging to the highest period within the protraction. Okay, close. Okay, sorry, pressed. I was trying to get the brush, it then doesn't allow you to do both. So I pressed once, removed the finger from the screen, then I'm pressing it again, long press, and then pressing with the second one again, now dragging it. So to the highest high of the protraction, that's 323 points, measurement of price movement in distance. Then to the lowest low of the protraction, that's 401 points. So it means price moved further lower more than it moved higher. So I consider this as a downward movement, meaning that I'm expecting a bullish bias day. Remember, protractions are movement against the bias. So now that you can see this day was correctly predicted bias, because for sure there was upward momentum, and the next day obviously closed above open price of day. Okay, from the open price of day here, this will be where the trade would be opened. So soon as you would get your bias reading from the close of this 6:30 candle GMT, which is close of 2:30 a.m. EST, New York time, you would then now wait for price to come back down to the open price of day and open a buy trade, expecting price to go up. Because remember, you can't open the trade here at the price where you got the bias reading, because it's like you have a head start and are starting your trade in a worst case scenario. So since the logic is predicting the momentum of the candle, okay, you open the trade at the open price of day. Okay, so you have to wait for price from here where you got the signal, the close of the 2:30 a.m. EST time or 6:30 a.m. GMT time. You are then after that wait for price to come there, then you would open your trade. Okay, so for those new to trading, let's say price was here at that time. Okay, let me move the screen back a bit so it seems as if it's more realistic. Okay, if you would see the chart like this, you would actually place a pending order, and you drag this buy limit there to that price level, and then soon as price would have dropped, okay, just at that blue line, okay, it would have been coming from there. Soon as it would come down to the blue line, it would open your buy trade. Then you could even before price reached to open price, selected stop loss. So maybe you would drag your stop loss to whatever, then also TP to drag to whatever. Then remember, if price hits the stop loss first, your trades get closed in a loss with that loss, $3.41. But if it would hit your take profit first, it would close automatically the trade in a loss with in a profit, sorry, with $5.15, given you using the lot size that will be on default there. If you increase the lot size by pressing up, okay, and then selecting whatever whatever amount you want to increase with, it would increase the profits or losses. If you look at the profits or losses, you see every time I press there, they will increase. If I increase with even a bigger figure, they will increase even further. If I select down, it will give me measurements which I can reduce with. Okay, or even these which you can just quickly maybe select a certain number, or you can actually erase by selecting on the number itself and then typing the one which you want, although they will have a minimum that they will offer. Then to remove this, you can just press again there, and if you don't want to open it with a pending order, you can even just press on the screen and then open with a market execution, opening a trade at the current price by pressing sell or buy with the trade opening at the current price of that time. Okay, so for intraday trading, if it's a trade higher than 5-minute time frame, okay, I just use the 5-minute time frame to record the end time and start time of the trade. But if I'm scalping on lower time frames like 1 minute or 2 minutes, I'll go down to even lower time frames. So after this candle, the next candle of 6:45, I already could have opened a trade. So now when recording, okay, so I'm going to use, of course, this device. I can't record the backtest on a book because I want you to actually see me recording the trades. Okay, so here it's just this document. Okay, daily range strategy. You also, even in your backtest, have to write even the instrument, of course, so you have record keeping, which you can come back and refer to in the future. US 500 stock index. So for the binary option version, it's just, it doesn't matter the distance with which price moves with exactly. Okay, so I will just maybe use this numbering. So this is a trade. Okay, the date is 14 April. Okay, I was still having the underlining feature, so I'll remove it. Okay, 14 April. Then you could even write 26. Okay, then it does that. So, okay, actually, what you can do is even underline the date. It makes it maybe even more presentable for you, whatever you want anyway. Okay, so start of trade, it's actually 6:45. I'm recording in GMT time, but if you want to use EST time, you can use EST time. So I record time of my trades, and recording times of trades from beginning to end. Also, this is the binary option version, so yeah, I won't record okay, you can record but for binary options, because we already know that the day closes at the end of day, which is midnight EST, it's always the same time, so there's no need to record. But in CFDs you can record. Although you should also know that for binary options, when trading with derivative broker, for the stock indices, the time that they open the market for you to open trades might be slightly later than the time which the trade starts. So for example, sometimes the market for the binary option for you to place trades could open around 9 a.m. Zim SA time, but you could still set your trade expiry time to be whatever time you want it to expire. Okay, so I won't put time there since it's always end of New York day, the end of the trade, because remember, you wait for the trade to close at the end of day. Okay, here now at the close of 3:45 candle the next day. Okay, so the day obviously closed higher, okay, than open price. So that would have been a winning trade, which you could have entered. Now, one of the things that I use as confirmations sometimes will be additional bias methods. So besides the first protraction bias method, there are other bias methods I gave you in that video on bias methods. So like the other one can be the first hour of London Open. Okay, the first open session for London Open, that will be 2 to 5 a.m. New York time. If you add 4 hours GMT time now here on MetaTrader, it will be 6 to 9 a.m. GMT. So for start from 6 a.m. open sessions now, unlike protractions, they move price in the same direction of daily bias expected, because that's how the day moves. It pumps, the price algorithm pumps your day with open sessions, and then in times of protractions in between the open sessions, price may do some manipulations to come back down. So reason why it comes back down is because when price would have increased, okay, market makers will know at this time that some traders would have seen that price has increased. So some will start opening buy trades, chasing price. Then market makers will now drop price to try and entice some traders to open sell trades, but also at the same time to stop out traders who may have moved up their stop loss further in profit. Because remember, some of the traders, even though the open price was there, they could start with their stop loss there. Then when price would have increased so much at this time, some traders now move their stop loss higher. Okay, remember this. Let me actually use an actual example. So buy limit would have been here. Okay, stop loss there, take profit. Okay, so maybe it will be above that high. So when price would have now increased, some traders would then now move up their stop loss to entry. Some will even move it further in profit to just below a low. Okay, when price will now be here. So as market, the price algorithm can now drive price to take the stop loss before further increasing, so that the traders already in profit will no longer keep to make profit, and the open trades will be stopped out and closed with whatever profit they accumulated here, before price will then continue to increase again. Okay, so now to record the CFD version of this trade before I add more confirmations. But I had explained that the other confirmation you can use is first hour of London Open, which is 2 to 3 a.m. New York time, or 6 to 7 a.m. GMT. Now adding 4 hours here on MetaTrader. So that will, since it's an hour, that will be 4 candles on the 15-minute time frame. This one, okay, that one, 2, 3, and 4. So you can clearly see price moved higher. Okay, it moved higher. Okay, more than it moved lower to the lowest low of that 1 hour period. So that's even another confirmation. One could even come and write here. So I just write it as first hour London. The actual London Open will be 2 to 5 a.m. New York time, or 6 to 9 a.m. GMT. It's just adding 4 hours. So I'm not going to list all the confirmations. You use the confirmations I gave you in my video on market conditions to improve trade conditions. In the VIP group, there will be more confirmations there in the paid group. So now I'm just recording the CFD version of the trade. CFD version or futures version, okay, type of derivative where it won't be just binary options. So same thing, if I go to that open price, even though it's not exact, I'm just going to press near it so I save time. So you can see that 411 points. Okay, if I now come to the CFDs there, so using a device does have an advantage. You can copy and paste, but overall I just saw as if writing on a pen or on paper will be really fast, and it will help you to record more trades over time. Okay, so even though those confirmations I usually put them near at the bottom after date, I usually then write time. So 6:45, this is GMT time. Okay, to where the highest it went now in regards the highest it went within the period up until end of the day, okay, will be from that open price of day, dragging it up to, I think it's this high, because this other high is now after 4 a.m., which will now be the next day. So up to that highest high, that's 8,803 points. So that will be TP, take profit, which is just highest take profit target, 8,803. The next one would be stop loss, which would be your drawdown. So I had not yet recorded the end time of trade, of end time, not necessarily of day, but of highest price, 23:45 GMT. Okay, and then the drawdown on the trade drawdown, in which the trade went in a loss from open price after, remember our bias reading came after close of 6:30 candle. So we no longer include this candle on the drawdown because we open the trade within this candle. So it's just from this black line to the lowest low of the 6:45 candle. Remember, on green candles, price starts forming the lower wick and then later goes on to form the body. So that's 81 points. So when I write my confirmations, okay, like on this one of first hour London, this is actually a longer way of writing it. I write it in form of abbreviations. That way it makes your backtest even faster. Okay, so I can just write first hour like that. Actually, what I do is I just write first HR, first hour London. I already know that of all the other bias methods is the only one uh, which has a closer name to that. Okay, so now I'm going to go on a higher time frame to look for even more confirmation. So another confirmation you can use is trading in the same direction of 4-hour trend for the CFD and future version of trade. Okay, not for binary options. The binary option does get affected with 4-hour time frame, yes, but not so much. So if I go to the 4-hour time frame and then press the blue box there, okay, to go on the same day, and then I'm going back to switch on those EMAs. Then I'm just zooming in since it's the first time I opened this instrument. Okay, 14 April was somewhere there. You can see the EMAs are going upward. Okay, so also higher time frame trend. So another confirmation, I'll just write 4 hour. That's how I just list mine for 4 hour trend. Okay, a full stop after each confirmation. And then had there been a 4 hour swing against the open of my trade, I also then would have written against 4 hour swing. Had there been a 3 candle 4 hour swing before my trader would have opened, that it would be in my favor for the CFD version, because you will now be trading on the 30-minute time frame for CFD and future version. Here where your profit is determined with distance with which price moves. But for binary options, because your trade closes exactly at the end of the day at midnight EST, you'll be trading on 1 hour time frame. So 4 hour time frame won't really affect you now. Then another, I can even just put a vertical line so I know where 14 April is at the time where I open trade, so that when I go up on the daily time frame looking for another confirmation, I can then be able to easily see where we were. So here, okay, usually these candles which will be very small on a broker which includes Sunday candles, this will be Sunday candles. At least MetaTrader now lists the day at the low there. So you just ignore those Sunday candles whenever you'll be doing your analysis. So there's no 3 candle swing pattern which formed before that, so I won't write any confirmation to do with that. If I now go to the weekly time frame, okay, I'll now switch on the 40 EMA, switch off the 9 EMA. Okay, so you need, on the weekly time frame, you need at least, I use at least 2 years trading data to calculate it and trust the reading. I mean, because 2 years would now be 2 segments, 2 full segments on the weekly time frame. And then for daily time frame trends, I would just want there to be 2, maybe just 1 year at least. But for a more accurate reading, you could have gone to Exness broker, where you would, because they are not using a new price feed source for stock indices or even other brokers. Okay, but even if I just use this one, you can see the EMAs are in an uptrend, because from since when they crossed, okay, they were pointing higher and opening away from each other. So for me here, I could then just write WK. For me, that just stands for weekly time frame trend. This one I can also write it now on the binary option version. So first hour, that's a short abbreviation, because the less letters you use, the faster you can write your trades in your backtest. But if you want to use longer words as a beginner, slightly longer words, maybe it might help you to remember better. Then with experience, you can end up shortening them. So before I continue with this backtest, I'm going to show you a photo of how I actually write the confirmations within. So this is a photo of how I actually write things on my, although you can see I will be writing a bit fast, so the handwriting won't be really clearly. So okay, you see this is a trade, another one on the winning trades, another one. So this one is a CFD strategy to a step index for binary options, daily range. Okay, so you can see, of course, there the date, Okay, then for TP and stop loss, I had first options, second options. The reason why I'll put two options is that there are some trade setups sometimes where they can be a TP and stop loss which you can use in backtests, where you would have a smaller drawdown and then price would then continue going up again and have a bigger drawdown. If I use this marker as an example, let's say price start here, okay, it could go in a small drawdown, go up, okay, that will be first option of trade. And then after that, price could have continued to go into a deeper drawdown, a loss, and then continued going up. So I would just record both options. Then at the end of the backtest, when doing analysis, now then compare the examples. So this is just time of trade. It would start at 5:10, 3:30. That's a confirmation. Remember the opposite, the first opposite end of a candle will form at 3:30 a.m. EST in financial instruments. Then in CFD, it will be 3:30 GMT in the morning. So for example, if price starts here at open price of day, when it forms its first week, okay, after that it will then increase maybe to the high of the candle, then after that gradually decrease to form the closing price of the candle. Usually this lowest low of day will usually be 3:30 a.m. around that time. So it will be 3:30 a.m. New York time EST for financial instruments. Then when it's synthetic indices, it will be GMT time. Okay, so that means that on this day, the price of 3:30, okay, was on the correct side of the day. It was below the open price of day. If it would have been a case where from open price of day, okay, the price at 3:30 was above it and price just went continuing going higher, I wouldn't have recorded 3:30 as a confirmation on this day. Okay, so these are not all the confirmations that I use. Okay, I actually use a lot, uh, almost a total of about 40, but sometimes momentum strategies have their confirmations which may not be used on order-based strategies, and order-based strategies have their confirmations which may not be used on momentum strategy. So sometimes when I'm recording a momentum based strategy like this one of candle ranges, I may be recording close to about maybe 10 to 15 to 20, looking for 10 to 15 to 20 confirmations. But you don't need to do that. It's just that my trading, I really want it to be of very high win rates with a very high performance. Plus I'm also preparing for two trading competitions next year. But you can just use whatever number of confirmations you are comfortable with, which won't burn you out, especially as a newer trader. And then with time you can then increase them. So this one DWS, for me that's a double weekly swing. So remember, if I go back to the charts, okay, remove that open price of day, even the EMAs, so you can see more clearly. So remember that I mentioned in the group that a swing low, okay, is a 3 candle pattern where the lowest low of a candle, of that red candle, has its lows lower than the lows of those two candles surrounding it, of the two candles surrounding it. That swing low pattern usually pushes price after the 3 candle pattern. Now on the 4th candle, on that green candle, you can see it actually had upward momentum by it being a green color. Now this three candle pattern is a simple swing, because when the swing in itself formed of that three candle, it did not break an opposing swing. Price of this candle did not go above that candle to break an opposing swing, which is a swing high that would push price down on its fourth candle after the three candle pattern. So an example of a double swing, okay, this one could even be an example, because on this three candle pattern of a swing low, okay, where the low of that middle candle is its low lower than the lows of the two candles surrounding it, as the three candle pattern was forming, this candle went above this red candle, so it broke a swing high. But I'm now seeing just now that this is not a good example of a swing high, because its high is higher, yes, than the highest than the highs of the two candles surrounding it, but its low is also lower than the lows of the two candles surrounding it. So it then becomes more of like both a swing high and a swing low at the same time. So you shouldn't use those examples. But if you look at like this one, okay, this three candle pattern, it's a swing low where its low is lower than the lows of the two candles surrounding it. We would expect bullish or upward momentum on that red candle, but this one becomes what I call a double swing, because as the three candle pattern formed, it also broke a swing high in the process. It broke an opposing swing, because this was also a swing high where its high, okay, was high than the highs of the two candles surrounding it, with us expecting downward momentum on that candle, although there was a wrong prediction on that one. So double swings, okay, where a swing forms whilst breaking another swings, will be stronger than simple swings. So whenever there will be a double swing in my trades, I do write that as a confirmation. So DWS, for me, I denote that as double weekly swing, meaning that on the weekly time frame, there was a double weekly swing before the week within I was trading. Although, of course, it was a daily range strategy, but the day was within a week, where that week had a double weekly swing that had formed before that week. Then daily swing means there was a three candle swing before the day I was trading. I used that as weekly time frame trend. The trade was in the same direction of weekly time frame trend, period 18 and 40 exponential moving average crossover. Okay, these ones, I'm not going to tell you these ones. I'm going to use them for my trading competition next year. They're not even in my VIP group. Amen. I use them for, that's just monthly time frame trend for me. You can write whatever you relate to. This one I use it to denote against monthly time frame swing, meaning that within the month the trade was, before that month there was a month on the monthly time frame which was bringing opposing momentum to my trade. Okay, so in terms of now considering, okay, before I go to explain that on MetaTrader, let me see if there's another confirmation. Okay, so another confirmation I had never talked of when using CFDs, you can see against 4-hour time frame double swing, another one there. Okay, yeah, so I do use a weight low. Okay, then there's also protraction, PR. So for synthetic indices, I use, instead of using the first 2 hours, 45 minutes of a day, I just use the first 2 hours. I saw that to be more efficient on volatility indices. But they did be in financial instruments, I would have used 2 hours, 45 minutes. Remember, this is just initial movement of day, which opposes momentum of the day. So now, in terms of how many time frames I consider when looking at swings which suppress or use trades, if I'm trading the daily range strategy where I'm trying to predict candle color of the daily trades, okay, if I'm trading the binary option version where trades obviously close it exactly at end of day, I will be using 1 hour time frame to view price. So I don't care about the 4 hour time frame. It will be too close to the 1 hour time frame. It won't really, it does affect it, but it doesn't give how can I explain it? It doesn't give more of a bit of a longer term direction, which shows context of where price is eventually trying to go. It will be too close, 1 hour time frame with 4 hour time frame. Although it would help on the CFDs, because now CFDs, I viewed them on the 30-minute time frame for daily candle range strategy. That's because when you are trading CFDs, you are trading maybe the smallest take profit target from backtest to biggest drawdown in backtest. So sometimes your trade now closes earlier than the actual end of day. So if I'm recording the CFD version or futures version of the strategy on MetaTrader here on TradingView, where for beginners, remember, profit is determined by distance with which price moves. If it's the CFD or futures version, I do include the 4 hour time frame. So I can include 4 hour time frame trend, okay, with the 9 and 18 exponential moving averages. It's in my favor. It doesn't matter if it's against my trade. I don't record that. I only record when it's in my favor. I will also record if there is a 4 hour time frame swing against my trade or pushing trade in my favor before the 4 hour time frame candle that I will open the trade. Then, okay, so I mentioned that 4 hour time frame, I only use it for CFDs or futures. Daily time frame swing, guaranteed I use it. It's the candle that you are predicting bias. So definitely you cannot open a trade against a previous daily time frame swing. So for example, this 3 candle pattern swing high will push price down, okay, and it did produce a red candle after that. Within this red candle, if I was trading on this day, I would not open a buy trade, although trend is in an uptrend, okay, shown by these moving averages, okay, going up after having crossed the pointing upwards. Okay, so because it's an uptrend, okay, I definitely would have never opened a trade on this day of a buy trade, because this 3 candle pattern swing, this swing, I would suppress your trade. Now you could, if you do trade, actually you are not even supposed to trade against a daily candle swing, because it's the same trade pattern, is the trade pattern like it's in itself you are trading. Now going to the weekly time frame, how I use it and consider it when affecting my trades. If I remove the 9 EMA, put in the 40, I do record, of course, weekly time frame trend if it's in my favor. It doesn't matter if it's against my trades. I only record it as a confirmation if it's in my favor for the daily range candle strategy. This will be next higher time frame. It will still affect your trade, even just on trend momentum. Then for swings, I also do consider it. So I do not take a trade if there is a weekly swing against my trade, even though the trade I am trading is predicting color of the daily time frame candle. If there is a weekly swing in favor of me, okay, meaning that if within the week I'm opening a trade, there is a swing low before that week pushing price up, I will record it as a confirmation. It will increase the momentum of your trade. It doesn't increase it as powerful as a daily swing would, but it does to improve performance. And then on the monthly time frame, which is second higher time frame above the daily, where the trade was set up more for the candle is being predicted by the monthly time frame also affects it. But this one you can be more flexible with it if you are someone who's not um, if you are I actually can trade against a monthly time frame swing when trading a daily time frame, not daily time frame, but predicting bias of the daily time frame. So if I'm against a monthly simple swing, I can trade a trade. But if it's against a double monthly swing, I do not take that trade. But I can just record those trades in my back test so that my back test will be finished in a shorter period of time by having a bigger sample of trades. But definitely when I'm trading, I'll never trade against a double monthly swing. If it's a trade of predicting the daily bias candle, even though I would be opening the trade on the 30-minute or 1 hour time frame, it doesn't matter. Because remember, double swings are more powerful than simple swings. So having a double monthly swing against you is almost the same effect as having a simple weekly swing against your trade, because a double monthly swing will be more powerful. The only case in which I would trade against a double monthly swing is if I'm against a I'm against a double monthly swing, but then there will be a weekly swing in my favor. So that will kind of neutralize the effect to some extent. That will be only when I will trade against a double monthly time frame swing. Okay. But the monthly time frame swings and trends also still do improve your trades or hinder your trades, but you can trade even if it's against just a monthly simple swing. Then if you are trading intraday, meaning that you are not just predicting bias of the daily candle, but you are doing scalp trades where they last seconds up to minutes, like the strategies in my VIP group. On those trades, okay, where you are trading less than the time frames that you open your trade are now less than 30-minute time frame, meaning 15-minute time frame or lower. When I'm doing scalp trades, okay, 4-hour time frame trend I included, definitely for trend and for swings, be it the swings is against me or in my favor. And then daily time frame I also included, even for scalping your trend, primarily will be on your daily time frame with 9 and 18 EMAs without these 40 black on my colors. I also include the daily time frame swings. Now, they will have a significant effect, but if you are someone who doesn't care about good performance in trading, if you are someone who can be content with trading even with just 60% win rate or lower, meaning winning 6 out of 10 trades on average or lower, you can scalp against a daily swing, meaning that your scalp trade, you want to buy trade, but you're against a daily swing. like here, this against this daily 3 candle swing, and within that day, if you are someone who doesn't want to do good win rates, you could now, because the scalp will now be even on a lower time frame. Okay, you are no longer trading on 30-minute or 1 hour time frame. You are now trading below 30-minute time frame. So the higher time frame momentums will now affect you less. But I don't even scalp against a daily swing, because I just want to trade high performance trading. But next year in my trading competitions, I may have no choice than to do that, because in the trading competitions there are some people who will be risking high, so you really have to get aggressive in opening more trades, even though they will have lower win rate, because you will have a bigger compounding effect with your account growing faster, even though your win rates may be low. But for this year, I do not do that. Then for scalp trades, your weekly time frame does improve your trading, but you can trade even against a weekly swing. I even scalp against weekly swings without any hesitation. But if obviously in my back test I do see them improving my trades, I do record them and do try to take the advantage of maybe now having a bigger take profit target or a smaller drawdown or stop loss. So I can scalp even against weekly time frame swings. And then I do also even record weekly time frame trends as a confirmation. They do also assist your scalps, although to a smaller degree, because this is even a way higher time frame. Then I do not uh, consider the monthly time frame for my scalps in itself. The only way in which I consider the monthly time frame for scalps trends to form what is a low resistant liquidity run. So if a scalp trade is in the same direction of a 4-hour trend, also in the same direction of a daily time frame trend, also in the same direction of a weekly time frame trend, and also of the monthly time frame trend, of on all those 4 time frame trends, those will be really powerful methods. It's a really powerful trade setup. Okay, so that's one way to look for low resistance liquidity run, meaning that your trades will have very little resistance against them, and those trades where the scalps have all 4 higher time frames in your favor will be really powerful. I even showed examples in that PDF which I gave you for notes on trading synthetic indices. So there is another way to look for low resistant liquidity runs, but that will be in my VIP group. Now, when backtesting or trading short-term trades, so now remember, short-term trades are those which last more than a day up to about a week. An example would be trading on the 4-hour time frame, opening trades on the 4-hour time frame. So this could be a strategy like where you predict the bias or color of a weekly time frame candle. Okay, so I will be opening trades on the 4-hour time frame. Okay, on the 4-hour time frame, your period demarcations would be showing the span of 1 week. So for those new to trading, if your application is new, you won't have those period separators, so you go to settings, okay, and then you select on, okay, here it's not shown, but if you, before I got, okay, it's actually a period separators, you have to make sure it will be ticked. Then to see price clearly, you also have to tick ask price line, so you see your spread well. And then if you want to use that option which was at the top of my chart for you to open trades fast by pressing pending orders, you can then use the actually you select it here. Okay, you go to this menu there, then settings, and then one click trading, you put it there. This is how now then you'll be able to make use of these features, depending orders in those market executions, without having to come on an instrument to manually select an instrument and then place new order and then type in take profit figure and stop loss figure. That will be a longer process. So when trading short-term trades which last more than a day up to a week, trading on the 4-hour time frame, I do not even consider the daily time frame because it will be too close to the 4-hour time frame. But primary trend, I check on the weekly time frame. It's compulsory for all the trades to be a primary trend. I never trade such a trade against a weekly time frame swing. You are not even supposed to do that, even if you trade with low win rates, because that is more of the trade setup in itself. Next higher time frame will be monthly time frame. So I do not trade against a monthly swing if it's a short-term trade. We trade last more than a day up to about a week, because still at the same time you are also, this is your next higher time frame on top of your primary time frame of weekly time frame trend. So it will still have a significant effect on your trade. And I will also use it, the monthly time frame trend, as a confirmation even just for the trending itself, even without the swings. And then even if you were on trading view application where you can see a 3-month chart, you can also use the 3-month time frame chart, although it will have a small effect on your trade. Then when trading swing trades are now trades which last more than, they last about 2 weeks to a few months, which last more than a week. Okay, these are trades now you open trades on the daily time frame. So these are longer term trades. So you opening them and trading on the daily time frame, obviously you ignore the weekly time frame, it will be too close. You don't even look at it. Your primary time frame for trend will be monthly time frame trend, where it's compulsory that all trades will be in same direction of your trend. If you don't like to use exponential moving averages, you can use other methods of trending, like the swing. If there is a 3-month candle swing on the monthly time frame, after that, on the next candle, that fourth candle can be seen to have trend. Same applies even for trades on lower time frame, be it intraday trading or short-term trading. If you don't like to use exponential moving averages, since they do have a small leg, you can even use the 3-candle swings. And remember, for those who are still new, if you are to research, most traders use 5-candle swing patterns instead of the 3-candle swing patterns which we used, meaning that their swings, instead of having just 3 candles like we do, they include actually 5 candles. But you shouldn't do that, because usually after 5 candles, on the 6th candle, the momentum would have died down. That's why we use just 3-candle swings. So since for swing trading, where you trade on the daily time frame, monthly time frame will be parental trend time frame. The next higher time frame will be 3-month time frame, which you can use on trading view application. The time frame will still have a significant effect I wouldn't even trade a swing trade against a 3-month time frame swing, unless if you are someone who is content with trading with lower win rates, like 60% win rate. And then even the 6-month time frame, which also is on trading view, can also affect your trades, although it will have a small effect. Okay, let me just check. Let me just do something big. Okay, so in case I forget, since also this video is now longer than I actually wanted it to be, I'm going to also show you a photo also of after I do a back test, what I do now when counting the trades. So you see that after I had done this back test of Apple stock of the daily candle range strategy, okay, trading on 30-minute time frame for CFD or futures derivatives, or an hour time frame for the binary option version. All morning here I was using the morning bias, where before the stocks were now trading for almost 24 hours, the equities, when they were trading for almost 6.5 hours, or for regular trading hours, the pre-market hours opening at 6 a.m. EST, you could use that as bias by it having the first opposite end of a daily time frame candle at 7:30 a.m. EST, after 1.5 hours from the beginning of the pre-market hours. Pre-market hours will be just a few hours before regular trading hours, whereas regular trading hours are from 9:30 a.m. EST to 4 p.m. EST. These are the times of day in the country where the stock comes from. That is when the stock market exchange center will be open. So that will be when a time when there will be more price volatility and also liquidity. So your trades, even for scalp trades, would perform better there. So what I was using is morning bias, was more of like a 3:30 confirmation that we use in instruments which trade almost 24 hours a day. But because at that time when I did this back test, as you can see, recorded for 2022, the pre-market hours were opening only from 6 a.m. EST, and post-market hours after regular trading hours would close, I think, around maybe 9 p.m. EST, I'm not sure. Whereas regular trading market hours would be 9:30 a.m. EST to 4 p.m. But the regular trading market hours haven't changed. They are still the same. So if right now, remember we saw that these days when the market hours were increased for stocks now trade almost for about 20 hours a day. So it now meaning that the morning confirmation will be different now. More of the like the 3:30 version of the confirmation. So I'm not sure what it will be now, but by next year, at least I'll be able to back test using the trading data of this year, 2026. So we'll see how the performance of this year will do, and end of this year I'll update my back test then. Then regular bias method will be just the one that I use for stocks, which is the first 30 minutes of regular trading market hours. So that's 9:30 a.m. EST, New York time, to 10 a.m. EST. It's the strongest portion of the New York Open session. New York Open session for financial instruments is 8:30 a.m. to 11 a.m. New York time. Second open session where there's volatility strong in the same direction, usually of daily bias. But for stock indices, 8:30 a.m. to 9:30 a.m. New York time. Unlike Forex currencies, 8:30 a.m. to 9:30 a.m. we have a Judah swing, meaning a movement or pausing bias. It's a protraction, a manipulation. But the stocks for actual equities, companies like Apple or Facebook, they don't open the regular trading market hours at 8:30, but now just at 9:30 a.m. New York time. So for New York open session, okay, ours is a more specific open session of New York than the regular New York session used by most traders, which is less effective. So for 9:30 a.m. to 10 a.m., that will be the strongest portion of the New York open session. So if the 30-minute period moves higher more than it moves lower, that will be a bullish bias. If it moves lower further than it moves higher, that will be a bearish bias. So when I just record my trades after here for this year, I'm just using smallest TP and biggest drawdown, which is biggest stop loss on the trades in backtest. Then I will also record the sample, the number of trades it had. But for next year, when I'm being trading competitions and I will have more trading data by doing more backtests, I won't be focusing on doing high win rates, but now be focusing on high returns. So I may be using some trade partials where if most of the trade positions in the backtest had big TPs, I might open some trade positions as a fraction of the total risk I want to use on a trade, to aim for those higher take profit targets as trading partials, instead of just having one big trade position. And I'll be using the proportions with which the higher take profit targets would have been achieved to also determine the proportions of the partials, which I will use to aim for certain targets and even have smaller stop loss targets. But for this year, I'm just using the smallest take profit and highest drawdown or stop loss. It gives you a higher win rate and a more guarantee of your trades hitting TP, and less trades hitting stop loss, having less losing trades. Then for those newer to trading, for financial instruments, July and August months have less performance than other months. So not including them when making your combinations, you'll see that they will give you better performance. I also mentioned in the other video that we also don't trade financial instruments in the first 2 weeks of the year, which is first 2 weeks of January and also last 3 weeks of December, last 3 weeks of the year, because our trading method is more of institutional based and it's more precise, although most retail traders do just avoid trading the first week of the year, just the first week of January and the last 2 weeks of the year, the last 2 weeks of December, but that leaves them with a less performance. Then here, this confirmation return PDHL, that's previous days high or low. So remember that price, if you are trading a candle range strategy, even like the daily candle range strategy. If you are predicting bullish bias, a candle to be green, more often than not times, on the day you are trading, price might go to the highest high that the previous day formed. And if you are trading a sell trade where you are predicting price to go down, predicting a red candle, a bearish bias, more times than not, price may go down to go below the lowest low that the previous day formed. So sometimes you can use that as an optional take profit target with a smaller portion of your trade size. Although this will not work all times, because sometimes the drawdown or the stop loss might end up being bigger than the initial stop loss that you wanted to use on your trade. So that's why you could then just use the smaller portion of your trade risk. So when I write this fraction 3 out of 4, it means that out of 4 trades with these conditions, 3 out of the 4 trades had the previous day's high or low taken out. Meaning that if they were buy trades, okay, the previous day's high was taken out with the current day. So I could then use this high as an optional take profit target and have a bigger profit with just a smaller portion of the trade size, one of the trade positions. So you can use that same concept even when trading the weekly range strategy, where you predict the bias of the weekly candle, but trading on the 4-hour time frame, that the previous week's high or low could be taken out. Same applies for the monthly candle range strategy of a swing trade, predicting the bias or candle color of the weekly time frame candle, or trading on the daily time frame. You can also use that same concept. So I'm just going to the last trade, excuse me, we recorded was the 14th April. The other advantage that MetaTrader application is, unlike TradingView, if you backtest an instrument a lot for longer periods. So remember, this is how candles paint, okay, for those still new to trading. So if you have any questions, you just ask me then. Also make sure that you would have watched the video on backtesting on my YouTube channel.